This is the weekly fundamental and technical analysis for the week starting from the 12th to 16th of May. And our agenda today will focus on the GDP, CPI, you have central bank balance sheet, and then we're looking at interest rates, unemployment rate, retail sales, and other notable events that are going to impact on our trading this new week. It is always good to have a balanced understanding of the market. So many persons just do technical analysis, but if you understand during this time of President Donald Trump, you will know that technical analysis is not sufficient. You need to balance it up with the fundamentals. Okay? And in this channel, we have one of the best fundamental framework for trading. So the video is going to be a bit long, and I want you to watch, because my approach to trading, we use the fundamental to generate the trade idea. We use it to know the overall trade direction, while the technical and the sentiment help us to know when to time the entry. Let's look at GDP of the 8 most traded economies. Starting from the United States, you can see what the GDP of the United States did. Under the last administration, US was well anchored when it comes to the GDP. It was around 4 point something, and then it dropped to around 2.4. But the last GDP reading that came out was very, very devastating. As you can see, it dropped significantly from 2.4% to minus 0.3%. And a lot of speculators have been saying that US might go into a recession. Well, I know that the US government is very sophisticated, along with the Federal Reserve Bank, and to fall into a recession, I believe they know what to do to get out of this. But you know that a recession is defined as 2 quarters of negative real GDP. So currently the GDP of America is minus 0.3, but we do not know what's going to happen in the next quarter. Looking at Switzerland, you see that the GDP dropped from 0.4% to 0.2%. And how does GDP help us to trade effectively? You know that the correlation between GDP and currency value is that whenever the GDP of a country is appreciating, when there is economic growth, people tend to demand that particular currency more, and that demand of that currency leads to currency appreciation. So that is what we are looking at in our analysis. If GDP is dropping, it might signal a kind of impact on the currency value. GDP is a lagging indicator. It showed what had happened, okay, but as we progress, you will understand. Japan had a slight increase in GDP. Australia had a slight increase in GDP. Then New Zealand actually moved from minus 1.1% to 0.7%. So if you see what happened last month, New Zealand dollar was doing very fine. Now you see here, Canadian dollar, you see a slight increase in GDP. United Kingdom, it grew from 0.0 to 0.1%, and in the Eurozone, it grew from 0.2% to 0.4%. So there is a correlation, but we do not just take one economic data and conclude our analysis. We will move further now to inflation. And then when it comes to inflation, you do not need to crack your brain about how it's going to impact on the currency. This is what you need to understand. All the major central banks, they like to keep their inflation level around 2%. So whenever inflation is above 2% and is growing away, the central bank has the responsibility to try to push inflation back to 2%. And how do they do this? They might either do it by increasing interest rate so that there will be less money in circulation. Okay, people will borrow less, and it will cause the inflation level to begin to drop. Okay, when there is not much activity, because if there is enough money in circulation, people would want to borrow more. If the interest rate is low, people will want to borrow more. But if interest rate is high, borrowers will stay away more, and that might push inflation back towards 2% mark. Now, looking at United States, the inflation level is currently above 2%. But what we see here on the trend for the past 3 months, you can see that inflation is gradually falling towards the 2% mark. And this is a good sign for the US economy. Now, looking at Switzerland, inflation has dropped from 0.2 to around 0.0%. This is not really good for the Swiss National Bank. If inflation goes to the negative, it is deflation, and deflation is not good for economic growth. The central bank usually does not like inflation to go towards zero or to fall below the zero mark. So their responsibility now is to see how they can ensure that inflation appreciates back towards the 2% mark. So that is the situation we have with Switzerland. And then looking at Japan, you can see that the Bank of Japan has been doing well in monitoring the inflation, and you can see inflation coming back towards 2%, but it's not yet at 2%. Now Australia has inflation slightly stable at 2.2%, but it's not yet at 2%. New Zealand has inflation dropping significantly towards the 2% mark, while Canada has inflation appreciating. Do you know when inflation is going up, it is a threat, and the central bank would have to do something to begin to cause inflation to start moving towards the 2% mark. And how would they do this? They can either increase interest rate or keep interest rate flat during a period when all the central banks are cutting interest rate. Right. So we have, if you look at United Kingdom, inflation is dropping, and in the Eurozone, it is currently around 2.2%, dropped from 2.3 in the previous month. Let's move forward to interest rate. Now, when a central bank is cutting interest rates, it usually leads to currency devaluation, okay? But if you look at it in the United States, they have kept their interest rate constant at 4.5%. Although there is a pressure from President Trump, okay, on the Federal Reserve Bank to cut interest rate, but based on the responsibility of the Federal Reserve Bank, their responsibility is not just to cut interest rate anyhow, but to ensure that whatever action they are doing will lead to price stability. Their responsibility is to use interest rate to control inflation if inflation is spinning out of control. Now, if they sense that there are indicators that want to cause inflation to spin out of control, they might not cut interest rate. This month, you saw that the Federal Reserve kept interest rate at 4.5%. We do not know what's going to be happening next month. Okay, but here, looking at the Swiss National Bank, the interest rate was cut from 0.5% to 0.25%. Based on what their inflation level is showing, we might see an additional cut in interest rate in the Swiss National Bank. I'm not saying that this is going to happen there, but this is what I feel as an analyst. In Japan, interest rate is currently sitting at 0.5%. Remember, their interest rate is actually coming towards 2% mark, so they are not too much under pressure. Then in Australia, interest rate is still kept around 4.1%. Then New Zealand cut interest rate from 3.75% to 3.50%. They are in a cutting cycle. That's what you need to understand. If you go to Canada, interest rate is sitting at 2.75%. Then in Great Britain, they cut their interest rate from 4.5 to around 4.25%. And in Eurozone, they have been in a cutting cycle where interest rate is currently sitting at 2.4%. So for countries that are cutting interest rate, the value of their currency might tend to drop accordingly. But what you need to understand in this analysis, that's why I don't want people to just stop halfway. At the end of the fundamental, we usually give a framework to show you the overall, because we do not just use one indicator in isolation, we do a combination. All right, so now let's move on to the next thing here, which is unemployment rate. The central bank usually keep their eyes on employment and inflation. Whatever action they will be taking on bonds and interest rate will be based on these two indicators. If the inflation is coming back towards 2% and there is enough job and unemployment is dropping, then central bank might be forced to hike. But if inflation is growing significantly and unemployment rate is also growing, they will find themselves in a complicated situation. If unemployment rate is growing, what action do you think the central bank might do when it comes to interest rate? They might be forced to cut interest rates so that investors can have more money to work with. And if people have more money, then economy can grow, people can gain more employment. But look at it here. In the United States, unemployment rate has remained the same as it was last month at 4.2%. In Switzerland, unemployment rate is currently at 2.4. In Japan, we had a slight increase in unemployment rate from 2.4% to 2.5%, while in Australia, unemployment rate remained constant. In New Zealand, unemployment rate remained constant. In Canada, we saw a slight increase in unemployment rate. In Great Britain, we saw unemployment rate constant. And in Eurozone, we saw a slight increase in unemployment rate. We are going to put all these things together very soon. Now, moving on to central bank balance sheet. The relationship between the central bank balance sheet and currency value is inverse. Okay, as the central bank balance sheet drops, the value of the currency tends to appreciate, and that's what we see here. If you look at the United States, for the past 1 month, you have seen a slight decrease in the central bank balance sheet, which is good for their currency. In Switzerland, we have seen a slight decrease. In Japan, we saw a decrease. In Australia, we saw a decrease. In New Zealand, we saw a decrease. In Canada, central bank balance sheet dropped by 6.4%. In Great Britain, it dropped by 4%. While in Eurozone, if you look at all the 8 other economies, the Euro area is the only place where we saw an increase in central bank balance sheets of around 0.5%, which can contribute to the weakening of the euro overall. Now, having looked at that, retail sales actually goes the same way with inflation, which is CPI. If the value of the retail sales appreciates, it's a sign that inflation is going to increase. And when inflation increases, it is a positive sign for the currency. Why? Because it is a sign that the central bank should be careful not to cut interest rate anyhow. And if they are not cutting interest rate when other people are cutting, it might contribute to the currency appreciation. So looking at this, US, their retail sales actually dropped. In Switzerland, we had a slight increase. In Japan, a drop. In Australia, an increase. In New Zealand, a slight increase. In Canada, it dropped. And then in Great Britain, we saw a drop. And in the Euro area, we saw that it increased a little. Okay, so that is what we have seen there. Now, moving on to hedge fund sentiment. The hedge fund sentiment actually is gotten from the COT report from Commodity Futures Trading Commission. And looking at this hedge fund sentiment, the total positions of hedge funds, what are the currencies that the institutions are buying, and what are the currencies that the institutions are selling? If you look at it, hedge funds have increased their position on the US dollar. Their total position in the previous week was 32.4% overall in the buy direction, but they increased it slightly to 33.7%. If you look at Switzerland, they also increased their position on the Swiss currency. In Japan, there was a slight increase in the Japanese yen. In Australia, we saw an increase as well, a little, from minus 9.5% to around minus 8.7%. In New Zealand, we saw an increase. In Canada, they have kept it constant. In Great Britain, a slight increase, while in the euro currency, they are actually selling the euro overall. Looking at the hedge fund sentiment, this is the change in the hedge fund positions. You know that this value comes out every week on Friday, so it shows you what had happened in the past. So most times it is not going to be very effective in the coming week, but it gives you an idea of what is going on, because hedge funds do not trade like retail traders that will just take one currency in 5 seconds, they close it, and most of their positions stay running for 21 days, sometimes into 3 months. And when they are pushing their money towards a particular currency, they are seeing what we retail traders are not seeing. So it's a very good sign for us to look at. So change in the hedge fund positions. You have seen here that they increased their position on the US dollar by 4% compared to how they did in the previous week. For Swiss franc, they increased it by around 24.77%. Japanese yen, they increased it by 24.53%. Australian dollar, you see it was 8.42. New Zealand dollar, 20.35%. While you have Canada, 2 point something. Great Britain, it was around 6.99%. But if you check the euro, they sold the euro by 65.22% compared to how they traded the previous week. This is a good sign for us to see. Remember, when we are checking other indicators, we saw that the euro overall is getting weak in their macroeconomics. But here we are seeing the action of hedge funds agreeing with what we have seen already. So what do you think is going to be happening? Now, coming to how we put all these things together, there are some calculations we do in the background to arrive at these conclusions. We are looking at the 8 most traded economies here. Here you will see their overall economic health. We rate the currencies after putting together everything that we have looked at. We rate the economies according to those economies that are doing well. All the 8 economies might be doing well, but there are slight variations which can contribute to the value of their currency either dropping or increasing. And so the fundamental is very important. Looking at this overall economic health, you can see here that the Australian dollar is the strongest economy based on our fundamental rating. The Australian dollar is well anchored. We gave it a rating of 70, while the second economy is the United States. When it comes to their economic health, the Australian dollar is positioned well in all the indicators we have looked at. The US is number 2. The number 3 currency we have there is the British pound. So the three strong currencies are the Australian dollar, the United States dollar, and the British pound. If you look at the lowest three, you are seeing something like the euro. The euro is at the bottom. You have Swiss franc, the number 2 from the bottom. Then you have Canadian dollar down there. So the three strong economies, we are going to pair that with the 3 weak ones, and it will give us an idea of what to look at for. So the first area we see is the economic health. The second place here, we are looking at improving conditions. The improving condition shows you how this particular currency performed last month and how it is doing this month of May. If you look at the improving condition, Australian dollar not only is the best as we have looked at it, it's also improving compared to how it performed last month by 14.75%. US dollar has increased slightly from how it performed last month to around 5.00%, while British pound, although it's the third strong economy, it is weakening based on how it performed last month. It is currently sitting around minus 3.28%, while Japan has dropped significantly by 11.67%. The euro has dropped by 24.47%. Swiss franc minus 11.63%. These are the things we look at. The currencies that are improving, we're going to be pairing them with the currencies that are weakening. We will see this in the chart when we look at the technicals. Okay, so looking at this current week from the 12th to 16th of May, we'll be looking at selling Euro AUD. We'll be looking at selling Euro US dollar. We'll be looking at selling the pound against the United States dollar, because we are selling in favor of the US dollar and against the euro. For the currency pairs that we'll be looking at buying, number 1 is the Australian dollar against Japanese yen. Remember the improving condition, we saw that Australian dollar is improving in economic condition while Japanese yen is weakening. So we'll pair these two and we'll buy in favor of the Australian dollar. If you look at USD Canadian dollar, we'll be looking for buy setup there as well. We'll be looking at buy setup on the USD against Japanese yen, buy conditions on the US dollar against Swiss franc, and we'll be looking at buy setup on Australian dollar against the Canadian dollar. So that is our bias. So when I go to the chart, the focus is what are we going to be doing? We will be trading in the direction of the fundamentals, right? If the technical align with the fundamental, we will take the trade without wasting time. But if they do not align, what do? We wait. Having said that, in the new week, Monday, you might not see much movement because there are no catalysts that will trigger some of the movement. The market might be dull, might be consolidating. So your own is to wait for the right place to execute your trade, because on Tuesday, Wednesday, Thursday, you'll be seeing movement. So on Tuesday, which is 13th of May, US claimant claim count and unemployment rate data is going to be released, and that is going to move the market. That same 13th of May, you will be seeing US CPI data will be released. Inflation in the US is going to have significant role to play this week. And then you see Australian unemployment data will be coming out on Thursday, which is the 15th of May. You should watch out for movement on Thursday. So on Monday, you might not see much movement. Just wait, mark your chart and watch for where you are going to enter. On Tuesday, you will see movement due to inflation in the US. On Wednesday, no much economic data. On Thursday, you will see Australian unemployment data. Then that same Thursday, you will see UK GDP. Pre-GDP in the United Kingdom is very significant. It's going to impact on our total rating, and it's going to actually move the market on that Thursday. All right, then on that same Thursday, you'll be seeing retail sales data in the US and the unemployment claim. A lot of people that will fight for unemployment rate, the data will be coming out that same Thursday, and it's going to actually be very very useful. Right then, finally, Japan GDP on the 16th, which is Friday, is going to move the market. So this is the overall fundamental that you need to put your mind into. Other things you need to bear in mind are the central bank speeches from their governors, central bank governors. When they begin to speak, you listen. Like in the United Kingdom, the central bank governor will be talking, okay, so you listen as well. And when Donald Trump tweets concerning his tariffs, you need to pay attention to that, because those events are actually going to be catalysts that is going to be moving the markets. All right, okay, let's look at US dollar, Canadian dollar as one of the currency pairs. Based on the fundamentals, we saw that this particular currency pair we should be buying, so we will be looking for buy setup this new week. If you start this analysis from the weekly time frame, you can see that this currency pair has been trending up for some time, came here and consolidated for a long time from January 2022 down to around October 2024. There was a range, then it broke out of it, traded up for some time, and is back to that level to retest. Okay, so last week we saw a bullish engulfing candle on the weekly time frame on this level, which is a good sign for us. Now this new week, what we have seen happen here, we might see a continuation of this movement down to this level and then up to that level. If you take a measurement of this from here down to the top there, you are seeing something around 797 pip movement overall. So it's a good sign that we can trade along. If you come to the daily time frame, you will see clearly what has happened there. The market came here, did a consolidation for a long time, and is pushing up. So we have an opportunity to join this movement. I usually end my analysis on the 4-hour time frame. So on the 4-hour time frame, what can you do on US dollar, Canadian dollar? This is what I can wait for. You take your Fibonacci retracement from this level and measure up to that point. All right, I would like to see this currency pair trade back towards this area, 61.8 fib level or this zone. Then I would look for buy setup. Remember, my trading style is swing. We'll be keeping that trade running for some time, either week or probably throughout the remaining part of May. Who knows, if everything align properly, and then we'll trade back to this area. And then if everything continue to align, we'll keep a trade running. So we might not look at all the currency pairs just to short it, but within the week I'll be doing other videos to show you what I am also seeing. For Euro AUD, you know that this currency, the fundamental has already told us that we should be selling this currency in favor of the Australian dollar. Then if you come to the weekly time frame, what do you see on the weekly time frame? What you can see here is that this market traded sometime in a range and broke out of that range, retested and pushed back. Ordinarily, what we have seen here might be a continuation of the upward movement, but the fundamentals say we should be looking for sell setup. So what I think might be happening in the coming week or weeks, this market can actually continue to trade back to this area, where to sit there before any movement. If you measure the number of pips there, you count that, it will give you around 800 pips. It's possible it can give you 800 pip, or even if it is 300 pip movement, is possible. So that is what the weekly showed us. If you come to the daily time frame, you can see that the currency is really pushing downward. By then, 4-hour time frame, what do we see on the 4-hour time frame? This is what we observe on the 4-hour time frame. Let me zoom this out so you can see clearly. On the 4-hour time frame, can you see that the technical is just one of the simplest things you need to do? The fundamental is the main thing that gives you the direction, but a lot of traders choose to ignore the fundamentals, which is not really a good one. What we can see here, there are possibilities that this, if you take this measurement from here down to this level, I like to use my Fibonacci to measure the most obvious levels. It can come back to this area. You might see a push back to this area. If it pushes back there, it's a good place to execute the trade and keep going down. Another thing you can observe, if the weakness of the euro is so significant, you can see this. It might just keep running down from where it is. Because if you take the measurement from this level, you see that it actually came to the 61.8 fib level and actually reacted significantly. So it might go back there and drop. So watch out and then take the necessary action with precautions. It's not like you have done analysis, then you throw away risk management. That is not how to be profitable in trading for a long time. Right? So for AUD Japanese yen, this is what you see. So if you look at the weekly time frame on this currency pair, what do you see ordinarily? You are seeing kind of a downtrend. The market went there. So from here, this was a high, it dropped to a low, created a high there, drop, and then it is up there and dropping. And then if you zoom out this area, you can see something like a downtrend. Clearly, some technical traders might be saying that that is a sell, but I do not like to trade against the direction of my fundamental, because fundamental has given me the direction, telling me that the Australian dollar is improving in the economic condition while Japanese yen is weakening in the economic condition. So why should I trade in favor of the one that is weakening? It doesn't really make sense. So if you come to the daily time frame, what do you see? If you get a trend line and draw it from this level down, take that trend line there, you can see that the market is testing the daily trend line. So for people who are pure technical traders who trade with trend line, this might be a place to look for sell setup. But for me, the fundamental says I should look for buy setup on this particular currency pair. Based on the fundamental, I would like this currency pair to break out of here, retest. So if it breaks out and retest, then we can look for buy setup. That's just what I would do as a swing trader who has seen the fundamentals before coming here. Okay, that's why it's not good to trade blindly with technical alone, or with technical alone you do not know what is going to cause that movement. So there are other currency pairs, but this video is already too long. I had to take my time to explain these things for your own benefit. So if you're new to the channel, I want you to click on the subscribe button and be a part of the community. Within the week, I will do technical analysis for some of other currency pairs that might be coming out, and it is good that you stay updated. So click on the subscribe button, be a part of the community, and also click the notification bell so that when I post a new video, you will get it and you will watch and prepare yourself before those trades play out. If you want me to teach you how to trade forex, check the description of this video. You will see a link to my WhatsApp. Chat me directly that you want to learn how to trade, that will do the fundamentals or the technical analysis. Okay, if you are a total beginner or you have been trading and struggling for some time and you want to have a sound grip of the market, chat me and I'll be glad to admit you into the Weldds Forex Academy.